Hey Shane, how's it going?
I'm alive, man. Just busy. Busy and waiting for the market to drop. So looks like we got a little fake pump this morning for a minute on some data. We'll get to that. And looks like the market has pretty much given it all back so far. S&P futures are down 7 basis points now as we talk, and they were up almost 1% for a little bit there, but I don't know. The Bulls were just looking for any reason to make the market go up a little bit, and that's going to be short-lived, I'm pretty sure, especially given Powell's recent testimony. So, um, but just a bunch more bearish data out there, man. The fundamentals are bearish, not good, nothing to get excited about. Don't listen to CNBC giving you any reason to buy stocks. It's just not going to work out in the long run, I don't think, right now.
Yeah, and I was a little optimistic for a minute. I was surprised that Powell's testimony didn't knock it down a little more, but I also think you need some consolidation days, and tomorrow is the non-farm payrolls number, so I'm expecting some movement there. But yeah,
Also, I have a tea time at noon, so the market should drop at noon Eastern time. Mark your calendar.
that's the best indicator out there. So,
Yeah.
well, with that, we can turn it over. But for anyone tuning in, today is March 9th, and let's go ahead and start getting into some charts here. All right, Shane. So first on deck, the SPY, so the ETF for the S&P 500. We've looked at this one quite a bit, and last time I was saying if they defend this level right here, could be bullish, but it it's hard to say. Today's price action is not going to be indicative of the overall trend. I think that, tomorrow might be the real move that happens, but we're sitting at the spot where we're just over the 200 day. We fell below the uptrending support line and MACD is down here negative. I don't have a whole lot of reason right now to be jumping and thinking this is the bottom, but you never know. But yeah, it's just not a very constructive chart on the long side right now.
No, I'd like to see it just grind sideways for a while, let the MACD go positive for a few days, and then drop the hammer on it. That's what I kind of think will happen. Who knows? I mean, predictions are short-term forecasts are like mostly useless, but that's what I think will happen. That's the most likely outcome, in my opinion, given what I'm seeing in the markets and in the fundamentals and just earnings and profits and interest rates and I don't know. It's not going to drop straight down. And I mean, when it gets going, it'll probably go quickly. But I think some consolidation here above the 200-day moving average, where you get a whole bunch of people thinking, "Oh, it's holding the 200-day. Let me get in. Let me get in. Let me get in." Once it can't hold that 200-day anymore, and the MACD goes from green back to red, then it can really get accelerating back down to the cycle lows from last year. So I don't I that's kind of my base case. That's what I expect to happen. And I mean from 400 back down to 350 is, that's a fair drop, right? 50 divided by 400 is about a 12% drop back down there to 350
Hmm.
that into that land. So I mean that's a material downside, and I think that's what the Fed wants to see. I think that's what needs to happen for inflation to actually get under control. I mean, the stock market price isn't directly going to impact inflation, but I think those things are related in various ways through the economy. So um, I don't know. That's just kind of what I see happening. That's what I'm angling for. But if we hold the 200-day and break out from here and make another higher high after making essentially what's going to amount to a higher low if it does hold here. I mean, it's going to be hard to argue with the fact that the downside is going to be limited going forward. So I think we're in a wait and see period where sideways consolidation is the most likely outcome, at least. And honestly, I don't even think for like the next couple of days. I kind of think for a couple of weeks we could just grind sideways as the MACD works itself into positive territory and then ultimately drops lower. So that's kind of what I'm playing for. I don't think the next couple of weeks is going to be a whole lot of movement. We'll
Yeah,
see.
and I tend to agree. I don't think that we're in this position where it's just going to fall off a cliff, hit new lows. I honestly, I think the most painful trade for anyone is a sideways market. And every year it's gone up, for the last 11 years or so. And what we haven't had is just a consolidation year or two or three. Um, So at this point, it is like we could just stay in this range and it doesn't just have to fall off a cliff. So we'll see how it plays out. But
And
I'm not.
if the market is going to grind sideways, what you need to do is learn how to sell options.
Yep.
That is how you're going to make money if the market goes sideways for a year. You're going to sell calls, sell puts that ultimately expire worthless because there's no movement. So um, that's what you do when the market goes sideways. Learn how to sell options.
Yep. So, and then turning to the NASDAQ, same thing. So MACD, it's going from kind of oversold to curling up a little bit, makes me feel
Mhm.
somewhat constructive, but
Yep.
it's just still, fundamentally rates hurt it, and you're stuck under this just a short-term downtrend resistance line you drew.
Yep.
But I just think this is going to have to move sideways more before it really gets constructive.
Oh yeah, you'll get a whole bunch of buyers on the golden cross here too when the 50-day crosses the 200-day from below. So that's the red line and the blue line there. I guess I could get out my drawing tool as well. But let's see this spot right here. Uh, as that red line crosses the blue line, you'll get a whole bunch of people talking very bullish about the old golden cross. I haven't found it to be a very good indicator in a short-term trade, more of a long-term thing to keep an eye
Hmm.
on. And it fakes out a lot of times too. It'll creep back above and then drop below on the next move lower. But I mean, honestly, the Qs looks a little bit better than the spies right now. But that said, the Qs is still down almost 30% from its highs. I mean, so we're up a bit, but it's we got a long ways to go to get back to its all-time high. And I kind of just expect the same thing, grind sideways and kind of make a move lower over time here as the Fed comes out and raises rates again. Um, looks like that's going to happen later in March. Higher rates are going to be worse for tech stocks. Tech stocks don't perform very well in what we call quad four. If you don't know what I mean when I say quads, read my recent commentary, which is up on the website as of last night, where I walk through a little bit of that. So yeah, I'm just kind of looking for more sideways. But again, if it breaks out from here and makes another higher high, um, after making what will amount to a higher low, like this, if this ends up being the low right there, that will be a higher low from this low, and this was a higher low from this low, right? So you would have that one and then that one and then that one and that could be a real good breakout. So it's going to be hard to argue with that if that holds up. But I'm just drawing lines on charts right now, so yeah, there's no guarantee that that's going to happen.
Yep. So we'll see. Shane, it looks like you had a line chart up here, the S&P. Um,
Yeah, so I did one of these for both the SPY and the Qs. And just something as kind of an interesting short-term indicator that I've been kind of paying attention to is this. So this blue line, the bright blue line that you see right on the chart, this is the 200-day moving average for the SPY, which has been trending lower for over a year now. Well, on February 27th, right here, it made its low point for the cycle. And since then, it hasn't been up every single day since then, but on average, it hasn't made a new low, hasn't gone below that point. So arguably, the 200-day moving average is now moving higher for the first time in over a year. And as that moves higher, if it sustains a consecutively, I don't pick a number of days, 20 days, 21 days, 25 days, 30 days, whatever, some number of consecutive days where the long-term moving average begins to trend higher. I think that's another indicator that, the cycle lows are going to hold and that we're going up from here. So
mhm.
this line right here is, the S&P 500, and that's that. I made it like kind of not very bold so that you could focus on just on the 200-day moving average, right? And so the stock, as long as the stock stays above the 200-day moving average, the 200-day moving average should continue to move higher. So that's something just to kind of keep an eye on. So as of right now, we're on like I don't know how many trading days have there been since the 27th? 1, 2, 3, 4, 5, 6, 7. We're on day 8 right now, and another 10 days or so, 15 days, and you might have something there to hold on to.
Yep. It's interesting you bring that up, and that's worth noting. And that's kind of what I've seen is that in this sideways, slightly up market, is the longer term trends are starting to catch up a little bit. So you
When
definitely
that
got to
is
pay
the trend.
attention.
Like when you look at the moving average, that is the trend. If it's going higher, then the trend is higher. If it's going lower, the trend is lower. So this is like one of those phase changes where it's sideways now. I mean, we're going sideways basically.
Hmm.
Um, and could it turn back lower? Of course it could. Um, but it also, for the first time, is showing some signs of turning higher. And if the S&P 500 long-term moving average is going higher, that means it's trending higher. And trying to fight that just because you see bearish fundamentals is probably going to lose you a bunch of money. So, um, just something that guys like me who are very bearish need to pay attention to and take with a grain of salt. That there are other things to look at than the fundamentals sometimes.
There are. So very good point there. And then Q's kind of same thing, just a
Yep.
slight turn up.
Same
So
idea, but we're only on like day 3 for the Qs. So Monday, March 6th. I guess so. What's today? Thursday. So we're on day 4 of higher 200-day moving average. So it's a little bit behind the S&P 500. But again, if both of these 200-day moving average start actually trending higher, you got to pay attention to that and say, wow, the trend is up. And that means you probably want to go longer than you have been. Doesn't mean you want to go all in necessarily, but I think it gives you way more logical reason to be a little bit longer the stock market.
yep. And here's the scary chart we keep pulling up, the 10-year. And this actually, I was looking ahead, isn't even the scariest chart, but it's not good. When you have the 10-year interest rate going up, it's going to make it really hard to borrow, hard to invest, doesn't necessarily help the stock market.
Yeah, and the momentum on it's actually declining. So that's a pretty good move so far from 3.4 all the way back above 4% for a minute. Now we're right at 3.97. So again, just another chart where I don't expect it to really drop materially, but more kind of grind sideways for a little while. Probably let the MACD stay red for a little while and then resume its uptrend as the Fed hikes rates later this month and the market begins to price in further rate hikes even beyond that. So it'll depend pretty heavily on inflation data coming out next week and kind of how things go. But all else equal, I just kind of expect this to grind higher and then resume its march. Excuse me, grind sideways and then resume its march higher after some consolidation and some momentum shift.
And I think that's pretty accurate. So I agree with you there. And here's something else that's kind of, I don't know if it's backing that up or just going with it. You're having a stronger US dollar. Again, not good for stocks. And with interest rates going higher, you're going to continue to see that.
Yeah, I mean, I think you can. Yeah, maybe there is a right answer, but I guess I'm not sure if the U.S. dollar and the 10-year Treasury yield are in a car. I don't really know who's driving and who's sitting
Yeah.
shotgun. But they're definitely going the same direction. Different magnitude sometimes. So yeah, it's hard to say which one's leading the other. But I'd say that the higher both of these go, the worse it's going to be for the stock market overall, and particularly for tech stocks. Um, so yeah, we'll see what happens, but definitely, in an uptrend below the 200-day moving average. Um, Another one where it's like momentum's been positive for a while now, and so chances are it's just going to kind of grind sideways, or maybe resume a drop back down towards 100. So,
Hmm.
but I wouldn't be surprised if the upside was done on the dollar in the short term and probably consolidates sideways too. So, whole market just kind of seems to be in a well, what's the Fed going to do later in March, and what's CPI going to be next week? Just everything kind of looks like it just wants to go sideways.
I agree on that one. So in oil, this is one Shane you called out last time.
Yeah, I
We
said,
broke above. I got bullish. I even sent you a private message, Colin. This was the bottom, and I said that because you had this really wide ranging candle on Friday. It went down to 76 and closed the day up at around 80. I thought for sure that's it. We're going to be racing higher, going above 80. And now here we are, right back down kind of in that $77 area.
Yeah, and on the call last week, I said I wouldn't be surprised to see a fake breakout and then a drop back towards 70. And so far, that's what's playing out. Of course, I got sucked into going long on Friday as well. Um, I don't trade oil, so I wasn't long the oil contract specifically. I went long, I went double long energy stocks, symbols ERX, and it looked great for about a day and a half, and then I stopped out yesterday. So I basically bought it right about there, and then I stopped out yesterday right about there. So I'm out of the trade now, and we'll see if it if it can resume the breakout. If so, I'll get back in. I don't have a problem jumping back in if we're gonna go this way, you know. But
Hmm.
at this point, I see the momentum shifting back to negative, and I could easily see what I called last week as a fake out here, and then a drop back towards $70. So see how that turns out. Maybe I should take my own advice and stay away from trading oil stocks when I, think I know what they're gonna do.
Yeah, it's a tough one. And that's the part of trading, right? You can sit here and be an analyst all day, but getting in there, making trades, managing the risk, different ballgame.
Got to make the trades, man. Can't just play with paper money and making calls. You got to go in and actually do it. So,
Yep. So, and here's one, Shane, we covered this last week on Bitcoin. What a great long entry. Nothing can go
yeah,
wrong, right? I mean, this is just textbook.
yeah, we both called it
So,
like, man, this thing looks perfect. The MACD is trying to curl up. We got a nice base. Coming up off the lows. Looks like it wants to break out, obviously.
yeah, obviously. So then you fast forward and I'm running
Yeah,
and I'm staying away from this chart. Clearly it broke out. And look at that. Imagine there were so many people like you and I
yep.
that picked that as the spot to get in and got flushed out. And now you're coming back to kind of this support level. Wouldn't
Yeah,
be surprised whatsoever to see it just keep rolling over.
now I'm looking at getting my fills on my limit orders that I have in my Coinbase account at 21,000 and then maybe 20,000 after that. So I am not very much long Bitcoin. I have very, very minimal exposure, and I'm just looking to nibble here and there, um, and add some as we go. But yeah, that thing did not break out. It broke down and looks pretty nasty. You got Silvergate Bank getting out of the crypto business and probably going to zero. SIVB is the symbol for Silicon Valley Bank. They're heavily focused on venture capital, not necessarily not crypto like Silvergate Bank. It's funny they don't even have to add a gate to the Silvergate, right? Like Watergate and whatever fraud gate. Well, it's already called Silvergate, so I mean, is it Silvergate Gate? Um, Sounds like it's going to be another fraud. By the way, I should have added a slide about this, but like back in October of last year, the CEO of SI Silvergate Bank came out and was like, so I think this was just after the Sam bank run fraud and the FTX scandal, that whole fraud hit, FTX gate, whatever you want to call it. But the CEO of Silvergate Bank came out and like wrote a letter that was filed with the SEC blaming short sellers for like raiding his bank and how nothing was going to go wrong and everything was fine. And I was like, "Oh, you should short that. That is a sign of very bad things to come." And of course, they couldn't file their 10K on time, and it looks like they might be in some trouble. The Silvergate stock is like, I think it went from, gosh, we should have put this chart in here, but I think it was like $2 a share this morning. Yeah, it was $2.27 this morning. This thing traded at $162 in March of last year, and I think it was even higher than that. Yeah, it traded $239 a share in November of 22, or yeah, in November. Is that right? November? No, sorry, November of 21. So at the all-time highs of the market, it was $240 a share, call it, and now it's $2.27 a share, down 99.07%. Holy moly.
Yeah, that's where risk management plays in, right? I'm
Yep.
sure that stock had a great story. The chart looked great, but if you
Oh
didn't get
yeah.
out, that didn't work out so well.
I longed it many times along the way. I thought it was great. I mean, when we ran a crypto hedge fund, I tried to get an account with them and they had a $10 million minimum
Jeez.
of cash in the bank account in order to open an account with them. So like, I mean, but as all their customers, went bankrupt, and the crypto prices just crashed. I mean, nobody could meet those minimums, and now who wants to do business with those guys? So as Bitcoin goes down, or as Silvergate goes down, people are going to end up force selling, their crypto. Like all those things are all very interlinked in various ways that I don't think anybody fully understands yet. And so I think that's why Bitcoin is under a lot of pressure right now, is because Silvergate Bank is now seeing its issues, and its clients are all scrambling trying to figure out what to do. And in the meantime, all the customers of all those different firms are like, hey, maybe I don't want to be in crypto right now. Please send me my money back. And it's leading to lots of selling pressure in Bitcoin. So it's just going to take time for all this to work itself out. I think Bitcoin's going to be fine in the long run. But that doesn't mean it can't drop to 10,000. I mean, of course it can. I don't think it will, but if it does, I'll be buying some. So anyway,
Yep,
Bitcoin looking pretty brutal.
it is.
But I'm not moving my $21,000 buy order, man. I'm buying some. 21,000, 20,000. Yep. We'll get some
Yeah,
more.
I would leave that out there. And this is the scariest chart we have in the whole deck. Look at this. This is the inversion of the yield curve, and now we are over one. I
Yeah.
mean, that's
That is that is bone chilling cold right there, man. That's
mm,
negative Celsius. Like that is bad. And it's not getting any better is the funny thing. Like it kind of continues to get worse, and spreads across the curve continue to invert. The deeper this goes and the longer it lasts, the worse the recession that's coming ought to be. Um, doesn't have to be, but it's fundamentally sound to assume that it will be. So I think the recession is coming. I think it's imminent, and I think it's going to be nasty. So this is the best indicator we have. Again, the black areas indicate recessions um, on this chart. So those black areas, right, like this guy and this guy and this guy and this guy, they were all preceded by an inverted yield curve, an inverted yield curve, an inverted yield curve. Even this one, inverted yield curve, and then there's a black area right here that you can see, which was like the COVID recession. Now,
hmm
do interest rates know anything about viruses being manufactured in Wuhan, China, in a lab and then accidentally leaked? If that's how it came about, no, interest rates don't know anything about that, but still predicted this recession, which I find just amazing.
yeah.
Um, so how does that happen? I mean, here's one where I guess right here there wasn't an immediate recession. The yield curve uninverted and then re-inverted before the recession finally came. So the timing is a little different all the time. So we'll see when the recession formally arrives, but I think one's coming, and I think it's likely to be pretty brutal.
hmm I agree. When you see that, I mean, that's worse than '07 dot-com bubble.
Yeah.
You have to go all the way back to 1980 to see something that's comparable. So,
And we'll see if the stock market and the market makers and on Wall Street can suck a whole bunch more people into the long technicals before the bottom really drops out on the recession. And just have all those people lose all that money. It would not surprise me in the least to see an all-out rally of 20% or more from the lows in the markets right before things get real bad, and
hmm
we ultimately do roll over and drop. So that's how the market likes to do it. Likes to inflict the most pain that it possibly can on the people who are least expecting it.
Yep. So then this one, central bank balance sheet. They talk about hiking rates, but Shane, tell us what this means.
Well, not even so much what it means. What actually really blew my mind, because I hadn't looked at this chart in TradingView in a while, but I was just kind of poking around looking for other stuff to throw in here. And what I find fascinating is that from here to here, this is how much the balance sheet got reduced from 2021 to the end of 2022, right? Call it, what's that? I don't know, $200 billion, I guess is what that is,
hmm
right? Because this is in trillions, so 8 point. 7.5 is 750 trillion to 500 or 550 billion. So yeah, $200 billion is what that dropped by. And now it went from 8.55 to 8.34. So in the first, call it, what's this? This is the end of February. So in the first 2 months of 2023, the Fed has cut the balance sheet by as much as they did in the entire year 2022. That's crazy talk, man. I mean, that means we're going to drop the balance sheet by 6 times as much as we did last year. And we all know how that helped the market last year, right? The market peaked and dropped all year long while the Fed was reducing its balance sheet. And now we're just kind of continuing this pace, which is madness. I'm glad they're doing it. I wish they'd do it faster, because that would really help inflation. But this is why money supply is dropping, because as the Fed lets those bonds mature and roll off its balance sheet, it takes the money in from the bonds that they owned, right? And so
Hmm.
like let's say they owned a bond at $1,000. Well, somebody has to, uh, when that matures, the $1,000 comes back to them from someone else. In this case, it's from the government, right? But what the Fed is doing with that money is lighting it on fire and not putting it back into circulation. So this is how they are taking money out of circulation. This is why we're seeing a sustained decline in year over year money supply for the first time in history. And that's going to be good at bringing inflation down. It should be good at strengthening the dollar, but it should be really bad for asset prices. Even if the Fed were to stop hiking interest rates, they're going to keep doing this. And I don't know. I just don't see how the market could go up materially in an environment where this is the backdrop. So uh, stay tuned. We'll see if they keep at it. But they sound committed, at least what they're saying. In the recent testimony and other Fed releases, it sounds like they're gonna continue letting the balance sheet wind down. So
Yep.
we'll see.
And then, back to this, we always just highlight what interest rates are at for mortgages and still just not looking good. Sitting up here, 30 years at 6.7, 15 years almost at 6, and it doesn't look like it's slowing down, but this is one I don't expect it to just go through the roof here, but it's working higher and it's at a point where people are definitely starting to put the brakes on their home buying purchases, and we'll see how it
Here's
all
a,
feeds through.
just another chart where I see, a range from 7% to 6% and probably a sideways consolidation move for an extended period before it picks a direction, which I hate to say it, but won't surprise me if it goes higher than 7%, which I mean, it's hard to afford a home with current wages being what they are and interest rates being what they are. So I mean, it's going to be hard to break above 7 and stay there, but I think it's possible, and I think it's more likely than going back to 5.
Yeah.
But for now, I kind of just see us going sideways between 6 and 7% on the 30-year mortgage, and it might be several months before it picks a direction.
Yep, I agree there. So, and just highlighting this point again, if people are out there, they're in this volatility and they're saying, "Hey, I've got cash. What do I do?" Um, you can get some really nice rates on short-term treasuries. So,
And this was from
these
last week, right?
this
So
is
the
last
rates are
week. Yep.
actually, yeah, the rates have ticked up a little bit. We're getting over 5% on 3 months now, 6 months and 9 months. So, um, is that right? I think we were getting, yeah, I think it was over 5% on the 3 month side yesterday when I was buying these for some clients. So
Hmm.
I hope I'm not misspeaking there. I'm trying to pull it up while we're talking. But yeah, I mean you're getting pretty darn close to 5%. Yep, 3 month right now is 5.007.
Yeah, that's a
So
nice rate.
that's ridiculous. Ridiculous. I mean, why can you get a higher interest rate loaning the government money for 3 months than you can get loaning them money for 10 years? That don't make no sense.
Nope, that is
Doesn't make
backwards.
any sense at all. Anyway,
So, I think the next one, this one, are you highlighting here? So the energy sector, uh, the one
no,
sector that seems to do good, or
no, I thought this was actually the biggest important thing is that I keep
mm,
talking about a recession. Well, there's already a earnings recession going on in the S&P 500. So, um, first decline since third quarter of 2020, and so profits are coming down already. and that should lead to lower GDP, which is how they're going to finally determine that we are in a recession. So S&P 500 companies reporting lower earnings usually means that there is less GDP, less stuff being produced and bought and sold all throughout the whole economy. So it's just an early indicator that kind of backs up that we're heading into a recession. So I thought that was the most important thing. But I mean, obviously, inflation's a hot topic, right? So plenty of people talking about inflation on their earnings calls. Um, 67% of companies provided negative guidance on their call. So not only did they report an earnings decline, but they said don't get too excited about the future.
Mm-hmm.
Um, and it's also funny because 68% of the companies beat their estimates. So it's funny, like, you see the headline and it'll come out and say, "Oh, Target beat its earnings estimate for the fourth quarter by losing, you know, $10 billion in profit," or whatever it is.
Yeah.
It's just kind of funny. Like you can beat the estimate, but still be losing money compared to, last year, or losing money even overall because you didn't lose as much as expected or something. So got to be careful when you watch those headlines and just buy stock on the headlines, because you should go back and say, well, hey, the company beat its earnings estimate, but compare, did they earn $1 a share this year compared to $10 a share last year? If so, is that really a good thing that they beat really bad estimates?
Mm-hmm.
I mean, it's marginally okay, I guess, but they're still, they're down bigly from what they earned last year. So I don't know if that's the kind of company I want to own.
Yep. So, and then this one, unemployment claims. This is a big one because this is what the Fed's trying to accomplish, get people to, not be in the workforce as much. That lowers demand, and this is showing us it looks like it's ticking up a little bit.
Yeah, but not meaningfully. This is why the market tried to rally this morning, is because this number came out at 211,000, um, which is obviously higher than the recent trend, right? But it's not even as high as, 1 week in December. So it's kind of a nothing burger, but the bulls in the market wanted to grab a hold of this number right here and act like, oh, the jobless claims, the unemployment claims ticked up from last week, by a little bit, and so maybe the Fed is not going to hike rates anymore. Maybe they're already getting done what they want to get done, and so they're not going to have to hike rates anymore. Maybe we should buy stocks. And as of last check here, just a second ago, the S&P 500 now down 30 basis points for the day, after being up, almost 1% on this data report. This like this data report is not, like, even 260 thousand jobless claims in a month isn't that big a deal. Like, this needs to go to 500,000 jobs in a month lost, 1 million jobs lost in a month, before the Fed is actually having the kind of impact that they need to have and causing the unemployment rate to rise, which will again bring prices down. So um, this 211 is not enough. The Fed is going to continue hiking rates at, jobless claims being this low.
Yep.
And that's not to say that I want people to lose their jobs. I don't, but unemployment rate is at like a 53-year low right now of 3.4%. The unemployment rate should be closer to like 5%. That's how you get inflation down.
Mm-hmm.
And raising rates will do both of those things. Unfortunately, people will lose their jobs. Um, it is what it is. So this is not enough to sustain a bull market rally. It just isn't. So that's
Yeah.
why you're seeing a little bump this morning, and then everything sells off. So don't get too excited about these short-term moves. And tomorrow we get more data, more jobs data, and I'm playing golf, so look for a big sell-off tomorrow. We'll
Yep.
see.
Looks that way. So we'll see how it plays out, but um, still a ways to go. And then here's our good hedge eye cartoon. So um, it's pretty funny.
Yeah, the data turns me into a bear too. Every time I get all bullish looking at a stock chart and some technical analysis, I then look at the data and it turns me from a bull into a bear immediately, just like a witch turning a prince into a frog. So, yep, sometimes I wish I didn't know about the data and I could just buy stocks all the time, but
Hmm.
that wouldn't have served you very well last year. Um, so yeah, the data is pretty important, and it's worth paying attention to.
It is. And then no B article this week, but I pulled this out of the Wall Street Journal and I just thought it was funny. Yeah, this sounds like the shopper that goes into the store and says, I saved 30%. It's like, well, no, you still spent, $1,000 on clothes. It's just you got a discount. And it's funny how politicians go in and say, oh, we're gonna, cut the deficit by 3 trillion. Yeah. I don't think that's gonna be happening.
No, this is your own little satire article here. Like I think it's just silly. And it's of course it's unlikely to gain any momentum because all they want to do is tax businesses. Like it's not going anywhere. This is just some stuff people say.
Hmm.
It's dead on arrival. It's never going to happen. But I still like Warren Buffett's idea, which again I put in my market commentary, which is up on the website, elevatecapitaladvisors.com, I think /news. But if you just go to our website, click commentary in the top right, you can read it there. You can subscribe to it so that you get the commentary in the future if you don't already. But I put in there the quote from Warren Buffett. He says, I could fix the deficit in 5 minutes. It's just if you can't pass a budget with like a 3% deficit or more, like or less, uh, every member of Congress is ineligible for reelection. That's it.
Yeah.
And it's a pretty simple fix. And I think that's a logical thing. Like if you're sitting around at your family's dinner table figuring out how much to spend, that's how you would do it. You wouldn't say, well, we're going to have, $1,000 of income. Let's go spend $5,000. That wouldn't last very long.
Nope.
And that's not how you would run your house. So I don't know why we elect people to run our country that way. It's leads to a lot of inflation, shockingly, which isn't good for anyone. So
Nope.
anyway,
So interesting stuff. But Shane, looks like we're kind of at the end of our time. Thanks again this week for getting on here, and we'll see how it goes next week. But I think tomorrow's gonna be a lot of fun, watching the market move at least, because it's kind of been boring. But I think my bet's to the downside, and sounds like yours is too.
yeah, I'll be having fun chasing my golf ball into the woods probably, but you watch the markets and I'll play the golf.
Sounds good. Enjoy.
All right, man. See ya.